All right, traders, today we're pulling back the curtain on a super simple but really powerful strategy that's all about the market's natural daily rhythm. So if you're kind of new to this or you just feel like you're spinning your wheels, this explainer is for you. We're going to show you how to spot high probability trades just by understanding this one predictable pattern. Let's jump right in. So let me ask you this. Have you ever seen a breakout, jumped in thinking this is the big one, only to watch the market immediately reverse and smash your stop loss? It feels like a trap, right? Well, here's the thing. Most of the time, it is a trap. And that exact frustration is what we're going to solve today. See, the daily market isn't just random chaos. It's a game, and it has a trap built right into it every single day. The secret isn't trying to avoid the trap. It's about understanding who sets it, why they set it, and how you can flip the script and use it to your advantage. And that's where this whole idea comes in. We call it the power of three. Now, this isn't just another flashy indicator. It's a whole new way of looking at the market. It's about decoding the logic that the big institutional players, the big money, are using so you can finally trade with them instead of getting run over by them. The power of three is all about this AMD cycle. Think of it like a three-act play. First, you've got accumulation. That's when the big institutions are quietly building up their positions. Then comes the drama, manipulation. That's the trap. And finally, you have distribution. That's our money phase, where the market makes its true intended move. Okay, so what does this actually look like during a real trading day? Let's take a walk through a typical 24-hour cycle, all the way from the quiet Asian session to the crazy New York Open, and see these three phases in action. It all starts in the Asian session. It's usually quiet, sideways, that's accumulation. Then the London Open hits and bam, you get that false breakout designed to trap everybody. That's manipulation. And finally, the New York Open kicks off the distribution phase, the real move of the day. You gotta remember this, London sets the trap and New York springs it. Now, this slide right here is huge because it shows the two totally different mindsets at play. The average retail trader sees that breakout and they chase it. But the institution, they're the ones creating that breakout. Why? To go hunting for liquidity, which is just a fancy way of saying they're triggering all those stop losses. This is exactly why so many traders get stopped out moments before the real move happens. Now, you're probably thinking, how am I supposed to spot all this in real time? Well, you don't have to guess. There's this fantastic indicator on TradingView called Power of Three by TF Lab. It automatically color codes your chart, literally showing you the accumulation, manipulation, and distribution zones. It takes all the guesswork out of the equation. It's a real game changer. Okay, so we've got the why. Now let's get into the how. How do we actually take this idea and turn it into a concrete trade? Let's build your actionable blueprint. During that New York distribution phase, we don't just jump in blind. No, we wait for confirmation. First, we wait for a break of structure. That's just the market showing its hand, breaking a recent high or low against the fake out move. Second, we look for price to pull back to a key level, like an order block or a fair value gap. And third, that pullback, that's our green light. That's where we place our entry. And look, none of this works without rock-solid risk management. This part is absolutely crucial. Your stop loss goes just on the other side of that manipulation high or low, the very top of the trap. This keeps your risk super tight. From there, you're aiming for at least a 1 to 2 and ideally a 1 to 3 risk-to-reward ratio. Theory is one thing, but let's see what this looks like on a real live chart. We're going to check out two recent examples, one sell and one buy, just so you can see for yourself how clean these setups can really be. First up, let's look at USD/CAD. See this quiet, sideways grind? That's your Asian session accumulation. Then, London comes in and spikes up, grabbing all the liquidity resting above that range. Classic manipulation. And then, right on schedule, the New York session breaks structure to the downside and just absolutely melts. A perfect setup. And just to show you it works both ways, here's a buy on GBP/USD. It's the same pattern, just flipped upside down. You get your accumulation in Asia, then London takes a quick dip below the lows to set the trap, and right after that, a clean break of structure, and the price just rockets up through the entire New York session. It's the same logic every time. So the most important thing to take away from all of this is simple. Stop following the herd into those obvious breakouts. This entire strategy is about identifying where the big money is setting its traps and then aligning your trades with their real intentions. You're trading with the house, not against it. Ready to try this for yourself? Here's what you should do next. First, open up TradingView and find that Power of 3 by TF Lab indicator. Go back in time on your favorite charts and just see how often this pattern plays out. And finally, just practice. Practice spotting these 3 phases until it becomes second nature, until you can see them in your sleep. So I'll leave you with this question to really think about. Now that you can see the pattern, now that you know the game, the next time you see a big, tempting breakout during that London session, what are you gonna do? Are you gonna chase it like everyone else? Or are you going to patiently wait for the trap?